overlying circumstances. Like if you see the stock market collapse 25% in 2023, it's hard to imagine Bitcoin's not going to come back down and retest those lows. But for me, certainly, I mean, you start to see a weakening dollar, that helps. Gold price has really soared recently as well. That's telling you people are definitely looking for an alternative to US dollars. And in many ways, I think to stocks. I mean, I think there's this growing realization that the economy will go into recession in 2023. And what does that mean for earnings for stocks and the valuations as well? So I think, again, Bitcoin is the one that people are going to go to if they're going to choose a crypto. And I'm not surprised to see that accumulation going on.
Gareth is a pro trader with over 20 years of experience. He is the president, CEO, and chief market strategist for InTheMoneyStocks.com. In his early career, he dedicated himself to the study of technical charts. Soloway launched Verified Investing Crypto using the same technical tactics to help investors swing trade Bitcoin, Ether, and other coins. Gareth is one of the few analysts that continue to maintain bearish near-term prediction for the world's largest cryptocurrency. In his recent appearance in an interview, Gareth Soloway predicted Bitcoin could go as high as the $30,000 price level over the next month or so. The key is to look at the 10-year yield. If the US dollar declines, that is a short-term positive for Bitcoin. The cryptocurrency is a very young asset and will move wildly until it matures. As we can see, the cryptocurrencies jumped into the new year with an impressive month-long rally. Bitcoin is trading near 4-month highs after jumping above $22,300 on Friday. The top crypto surpassed its level prior to the collapse of the FTX exchange in November. And its 14 days of consecutive gains as of Wednesday marked its longest winning streak since 2017. But analysts warn the price of Bitcoin could halve before retesting highs in the second half of 2023.
The chart here and see what we have. So we can see that there was this wedge pattern from the collapse of FTX, and then we went in a very, very quiet range. And one of the little notes that told us that there was going to be some volatility was that we saw volatility in Bitcoin. I think it got to the lowest it had ever gotten. And anytime you go into this sleep mode, there's this tendency to wake up with a bang. And we certainly saw it here. You could see the breakout occurred right there. And as soon as that happened, there was kind of this melt up or bear market rally. Now, the reason why I'm calling it a bear market rally is that until we take out key levels, this is just a run-of-the-mill rip your face off rally. And I know that sounds crazy to a lot of Bitcoiners and crypto people, but if you look at other markets, the S&P, the NASDAQ, even stocks like Tesla, a bounce of 25, 35, 45% in a bear market is actually a relatively common occurrence. So as of now, I think we've rallied about 30, 35% in Bitcoin off of the lows. At this point, we still haven't taken out the psychological level here, which was the FTX high. And you can see how the price is stalled there, right? And we're even seeing a little bit of a pullback today, although we're off of the lows. But for me, at least, this is, as of now, it's a bear market rally. I have to treat it as such until we start taking out key levels such as this FTX high pivot. All the markets have declined. Historically, if we look at bear markets, this isn't that big of a decline. The S&P is not even down right now 20% from its all-time highs. And remember, the move from 2009 to these all-time highs, or from the COVID low to these all-time highs, was probably the biggest move we have almost ever seen in the stock market, at least reminiscent of the dot-com bubble move up in charts. So I do caution people that at least in the very least, you got to think we have to head down to that February 2020 high, which was just before that COVID collapse. In the very least, that kind of is the removal of the liquidity put in during COVID.
On the crypto side, we believe longer-term players have been looking to build exposure at perceived discounted prices. These players are betting that most of the downside from the crypto implosions of 2022 are now fully priced in. A more sustainable recovery will require deeper institutional adoption and regulatory clarity. Kruger says in his interview, while we have seen great strides in this direction, we believe there's still more room to close this gap. Fundamentally, global markets are still looking quite fragile, and assurances of a Fed pivot could very well be overstated. There is still plenty of fuel to send the pair higher, but that still does not mean that the bear market overall is done and dusted. The extension we are currently seeing so far in 2023 falls within the parameters of the Wave 4, even if it has broken some near-term technical levels to the top side, thereby increasing bullish momentum.
Catches my eye on Meta is that we've been in this downsloping trend line here, and we finally broke above it right over here. And again, for me, this doesn't mean we're in a new bull market for Meta. It just means there's a floor in price, meaning that this yellow line now becomes technical support. So for me, at least, what I would be doing is looking for a pullback into that level, which right now is around 113. And I think that's a buyable level on Meta. Now,
Okay.
again, I think Meta is kind of a unique case because it was already pounded down so much going into this kind of bear market. We saw it, obviously, it's corrected immensely over the last, basically 18 months or so. So I think the better case to look at for stocks is like, let's take a look at Apple. And this is a concern for me on Apple, right? So if you look at this bigger trend line that goes back to 2020, look at how price kept hammering and hammering and hammering, and then it broke. And if you look at where the market was when it started to reverse today, Apple was piercing that level, which again was support over here. It's now resistance. So it slammed into that and got pushed back down. And oftentimes when you see this chart set up, the resulting move is a move down like this. So again, for me, if I'm looking at the S&P 500, I'm also very concerned because you have this down sloping trend line, and look at where price was just into today's sell-off, right into this down sloping trend line. So for me, I'm expecting as much as a 25% drawdown in the S&P in 2023. And that's one of the reasons why I think it's going to be hard for crypto to really hold on to its gains.
It's been one blow after another for Meta and Apple in recent months. Downtrend line in S&P 500 is the top of a major negative channel and therefore is not a huge surprise to see you that we are ending the week with a red candle. Although 2023 earnings estimates for the tech sector have been dropping, which isn't a good sign for crypto market. At this point, it looks as if the market is just simply trying to roll over yet again. We are in the midst of earnings season, so it does make a certain amount of sense that we would have plenty of trouble. On the other hand, if we get some type of good vibes coming out of that earnings season, that could send this market looking to the 4,200 level above. Nonetheless, I think at this point, the market is trying to figure out where we are going to go next.
My forecasts are saying that the Fed has one or two more rate hikes in them, probably both 25 basis points, and then they're done. And we saw some economic news this morning that was very, very weak. It does portend to show a recession on the horizon. We just haven't seen the jobs market catch up yet. And I think that's going to be one of the realizations for the markets. Now, initially, you're going to see investors cheer because the Fed is going to go back to a neutral policy, which means they're not hiking, but they're not dropping. I think that ultimately the market in the second half of the year is going to start to get very scared over the aspect that inflation remains above 2% and the Fed cannot stimulate even in a recession, right? So if we slip into this recession, my fear is it becomes a long recession, a multi-year recession, because the Fed's not bailing us out due to inflation staying slightly elevated.
Yeah.
The data indicates that traders are treating Bitcoin's price rebound as a signal of a possible bigger breakout in the near future. It seems like new trends in stock market could lead to a strong Bitcoin recovery in the second half of the year, where it recovers above $50,000. What are your thoughts on Gareth Soloway's prediction about Bitcoin and other cryptocurrencies in 2023? Do you expect these assets to perform beyond investors' expectations? Let us know in the comment section below. If you like our content, give this video a big thumbs up and do subscribe to our channel.